Hello. Okay, greetings to fellow traders. Firstly, I would like to thank you for coming to this session. Right, and basically here what we will be discussing is, okay, we will be taking on any live trades because there is a trading signals. If there isn't any signals, okay, what we will be doing is we would be mainly discussing on markets. At the same time, I'll be showing you how to use our reports to take your trading decisions. Right. So this is Raju here. Okay. I would also like to just warn you or just take note that, whatever we discuss here, this is going to be purely education. And please stick to your rules. Okay. Meaning in the sense like, it doesn't mean that, like we give the signals, you have to put in your entire capital on the trade. Okay. No matter what happens, you have to stick to rules. And a good trader is always knows what he does, when to trade, when not to trade, and when to stay away from the market, right? So please take note of the risk disclosure, right? So basically now I'm going to show you how we use to take trades depending on what kind of crosses. We cross USD, this thing, and including gold, right? So any one of these crosses against each other, if you have any questions, feel free to type it out. Towards the end of the session, I'll be answering your questions or answering your doubts based on if you have any pertaining to this market, right? So, in fact, today we see that euro has been pretty weak against most of the crosses, and in fact, the yen has been the strongest during the Asian and beginning of Europe session, but right now it is having some pullback. So you see here, and how we look at this is basically you look at the net change. Okay, when we use the net change, okay, we use the previous US close as our guidance, right? And what we use is based on the net change. If you can see which has moved the highest, from there you can gauge which is the strongest and the weakest. So right now, as it is, there isn't any signals. Of course, if there is a signal, then we would be taking the trade. Otherwise, we would also be towards the end of the session, I can give you some signals pertaining to the market conditions. And also, we do not recommend any of our clients to trade during any data announcement, because see, most of the trades we practice is usually we're putting a stop loss of about 30 to 50 pips, not beyond 50 pips. So whenever you take trades during important data announcement, you know that the swings are pretty wild, especially if the data is not as expected or better than expected. So as a result, most of the time you would tend to get stopped out unnecessarily. So please take note that no matter what you do, please take necessary precautions by putting a stop loss. So now what I will be doing is I'll be showing you how to read our report, because this is where most of the people, in fact, has posted in FX Street. Just give me a minute. Just bear with me. I'm just putting the report, right? Okay, this is how our report looks. I hope you can see the screen. Just give me a minute. Okay. Yeah. Okay. This is how our report is seen, and mostly you see numbers. See, I do not know how many of you take a trade by looking at indicators, different indicators and oscillators. See, end of the day, you must understand, or you must accept the fact that this is a number game. And we do produce all these numbers, for those people who are looking at this report. Okay, no doubt it looks all numbers, but you must take note that these numbers are derived from proprietary technical analysis used to derive these numbers, and most of the time it's quite reliable. And also, for those of you who are traders who call yourself, if you want to be in this trade permanently, you must understand, you all are working on probabilities, in the sense that, like if you take for example, like if you take 10 trades, you must see like how many is a winning trade and how many is a losing trade, especially if you put practice stop losses. And that's one of the key way, you can be in the business in the long run, right? So now let me look at this. Let me show you this example on this Euro USD. What has happened based on the report and what is to be expected, right? And we usually publish this report before about 5:30 GMT, right? And it has got section 1 and section 2. The section 2 is mostly it is published in FX Trade. The section 1 is where you need to have a coming to our website to get a trial to get these numbers. So let's look at this example on this Euro USD. This is the previous close was 145 figure, and we show you the report mainly on 3 different time frames. And most of our clients, they are different types of traders, meaning in the intraday traders, short-term traders, or even long-term traders. So we show the trend in 3 different time frames. So the hourly trend on this scenario, it says sideways down while 145.80 holds. So what is so special about our report is the numbers makes a significant. So what we mean by that, meaning as long as the price doesn't go beyond this level, the price is expected to come down. And whatever the numbers which we have mentioned here, you have to use plus minus 5 pips because different brokerage firm will use different spreads. So as a result, you need to have some allowance of about 5 pips on all the majors. And if your trading crosses, is between 8 to 10 pips. So this the hourly says sideways down while 145.80 holds. So if you are a disciplined trader, okay, you should be looking to short near this level. The closer it is, the least risk and the most rewardable. So, and on the daily wise, it says sideways while 147.20 holds. So what it means by that, meaning is the sideways, it has been consolidating, meaning in the sense one day is up, one day is down. So the market is not giving us any clear direction. And on the weekly wise, it's also sideways while 149.05 holds. So overall, if you see all these 3, it tells you a red color, which denotes that overall the trend is in the selling mode. And these are the different levels for you to look at in order for you to see whether the trend holds, because we need to have a benchmark. Because a lot of I know a lot of people, they look at trends. You need to have a benchmark when does the trend change, or when does the trend is already changed from down to up or up to down. So you need to have these levels for you to tell yourself or use as a guideline to know that, okay, this is, as long as this level holds, the trend is still down. So after you see this, okay, we have an economic calendar whereby we only show you all those important economic calendar event happening for the whole day. So of course you can get it, your economic calendar, if you want to get it even from FX Trade or even our website. I suggest you get it printed out for the whole week so that you can track when are the key data announced. So after that, you have a section 2 or page 2. This is where you see a lot of wordings, and this is where you can see for yourself to guide you along to be expected. So on this example, we have this Euro USD, and we have different categorized into different sections. We have market summary, trend, daily patterns, today's strategies. This market summary is basically what has happened the day before from what we have mentioned from our report. So this Euro USD is closed at 145 figure, which was below the open and was within the prior day's trading range. And the high was 5 pips from precise traders resistance zone, and the low was precisely from so on and so forth. So the main sections to pay attention are the trend, daily patterns, today's strategies. So the trend wise, the hourly oscillators are bearish and the price is below the moving average. So the bulls have to be sidelined. So we are telling you that if you are bullish or if you are looking for a buying opportunity, you have to stay sidelined, because right now the buyers are in control. And the hourly trend is sideways down while 145.80 holds, and the daily trend is sideways while 147.20 holds. So expect the price to be choppy with a downside bias. So overall, what we are saying is the price is expected to come down, and you have to look for a shorting opportunity. So on the daily wise, okay, these are the levels, 3 levels you can say, and this levels mainly they act as a boundaries for the day, meaning in the sense the price high for the day you can expect at 145.45 or 145.85 or 146.65. So any one of these levels can be the high or low for the day. And the same thing goes on the low. If the price moves down, you can see 143.85 or 143.40 or even 142.85. So that's the maximum low you can expect for the day. So this can also be one of the trading opportunities, especially if you want to trade on a counter trend. So the most key portion in this reading, these 2 sections, are the patterns and today's strategies. These are the places whereby you can have a clear idea what to look forward to or what is to be expected. So on this daily trend has still been in a range trading, but the bulls are looking weak. So this is what we are expecting, right? So and the hourly trend has just started to break lower. So expect the bears to be in control. So the next sentence it says 145.45 or 145.80 are the critical levels to watch to maintain the bearish outlook. So overall, we are still emphasizing you telling you that as long as the price doesn't breach or go beyond 145.85 or 145.80, the price is expected to come down. And on the 5-minute is along the gradual down channel, and the price patterns are suggesting lower lows are expected, while the 145.15 is not breached. So what we are saying is, as long as the price doesn't go beyond 145, that means we are toning down. That means we are bringing you the levels lower and lower, so that you can have some guidance to take your trade entries based on the levels. And the opening price principle suggests that the bears might take control today, as the euro is pretty weak against most crosses. See, this last sentence, we would more or less we will give you a guidance, because what is to be expected for the day. Because sometimes you see, most of our predictions or most of our analysis is based on relative strength index, meaning in the sense it's not an RSI, but it's relative to other crosses, right? It's relative to other crosses. Let me get back to this screen, right? So relative to other crosses. So this is something you can say, this is what you can look forward to. And we also give the bulls and bears levels, alright? These bulls levels are where, if you are looking for a buying, sometimes if you shorted, if you are looking for a where to it on the safe side or the most comfortable zone, these levels can be used. The bulls can be, if you're looking to buy at 143.80 or 143.20 or even 142.20 if the price is moving down. And if you are looking for a selling opportunity or short, you see at 145.05 or even 146 figure, if you reach or if you see the price at that level, then probably you can look for a opportunity to short. And we also give some trading tips, which is also, it is going to be a very conservative, because you must understand the fact that the report is not produced instantaneously. It takes about 2 to 3 hours to prepare the report. So sometimes when we give a trading tip, it can be outdated by the time we post on the website. But that's where, you need to have come into our website to get the latest signals. So we have a conservative traders, which is basically you stay sideline or strictly trade at precise traders report levels. And the aggressive traders, you have to short near 144.65 or even 145.15 with a tight stop with a 50 pips profit target. So this is the trading tips which we generally give on FX Street website, whereby you can use it, right? So after you read this, so more or less I think you have a rough figure, okay, what is to be expected for the day and what is to be looked forward. So overall I'm looking for a shorting opportunity. So after you read this, what you do is you go back, and this is where you use to take your trading decisions or your trading exit and stop loss. These levels are used for you to guide you along to take your entry, exit, and stop loss, right? So the euro is right now is trading at 143.80, right? So basically you start off the day by looking at where is the last price trading. So if the last price is trading either above or below this support zone 1, meaning in the sense is that we have a resistance zone 1 to 12 on the high, and we have a support zone 1 to 12 on the low. So if by any means, if the price is trading within this zone, for example, let's assume that the price is trading at 145 figure, then we call it a no man's zone. And we would, for especially if you are a very conservative trader, it's a humble request not to take any trade during this time, because the price can be pretty choppy when the price moves into this no man's zone area. So, but if the price moves out away from this zone levels, that means if I'm bullish, then if the price breaks above 145.35, then I should be looking for a long or buying opportunity. And if I'm bearish, if the price breaks below 144.65, then I go for a short or selling opportunity. So this is where you decide what to do from the report, meaning whether you want to be a buyer or whether you want to be a seller, and where do you take your trades. So after you take trades, okay, we do have 1, 2, 3, 4 up to 12 levels, but the key levels to pay attention to, we have a zone 5, which we call it a U-turn zone. Okay, this can to have some struggle if the price goes up, and usually you see the price turning around this area at least for about 30-40 pips down move. Then you see the price continuing, right? So just give me a minute. Okay. So after you take trades, okay, we do have 3 levels of target prices. In the event if the price is going up, we expect to book our profit at 145.55 and 146.20 or even 146.85. These are the levels whereby you can use it to book your profits in the event the price goes up. And the critical resistance is where you can expect the market to turn or change or reverse directions in the event, if the price is going up. So on this scenario today, for example, the price has moved down and it is already coming down. So this is where you plan to book your profit in the event if you shorted at 144.65. We have an immediate support which is 144.45, and we have a next support which is 143.80, and we have a target 3 which is 143.10. Okay, this is how you use our levels, and you take your trade entries to take your entries or exit at these levels, right? Oh, I'm being too fast. Okay, then maybe I can slow down, right? So basically, this is how you use to enter or exit. And also, if you are a technical, if you are based on technical analysis, or if you are a technical trader, do understand the fact that your previous resistance would become as a support. Like for example, if the price has breached down, let's assume the price has gone down. Like right now, the price is trading at 143.80, right? So I look forward to, that means my immediate barrier would be 144.45 and 144.65. So these are the 2 levels I would be paying attention to take trades. If I missed my first move on that selling opportunity, if I want to re-enter, So this is one way whereby you can use our levels also for entry again. If in the event, if you miss that price, so that's one way you can get used to our levels, right? So this is how you use our report, and basically this is how you use and you take our trades. What most of our clients do is, see, because we do not believe in taking trades at market orders, because see, what we believe is, sometimes you must understand that the market always moves and stalls at certain levels. So that when you take trades at that levels, then that will be the least risk with the maximum profit. So that is one of the ways whereby you can use, and this is what we have been doing for many years, and this is what most of our clients have been doing. Rather than you look at enter on market orders, or even because I know some of you are looking at believe in oscillators, indicators, chart patterns. See, I'm not saying don't look at it. See, end of the day, you must understand the fact that trading is a game whereby you must enjoy it. At the same time, I think you must make it as simple as possible to take your entry and exit levels. And of course, I would be showing you some live examples, and we would be also discussing on any markets which you want to take trades. Okay, let me show you the same example what I've been showing you on that euro itself, right? Let's say I show you that example. Okay, can you see the chart? Give me a minute. I get back to the screen now. Right? Okay, let me show you this chart, Euro USD. Yeah. Okay. So you see, this is a 5-minute chart. Like as I told you early on, okay, we look at levels in our support zone 1. If you recall, our support zone 1 was at 144.65, and our resistance zone 1 at 145.35. So this two levels is where it will tell you to dictate, to show you that where after it breaks this level, like as I told you earlier on, if it breaks below the support zone level, zone 5, support zone 1, that's where I take my trade. So if you recall, earlier on I showed you that our levels of profit target was 144.45 and 143.80, right? And as I told you again, this you have to use plus minus 5 pips based on your, because different brokerage firm will use a different spread. So if you look at this on a 1-minute chart, let's say I show you on a 1-minute chart. Okay, this is how it looks on the 1-minute chart. And we published the report somewhere here. Okay, this is where we published about 5:30 GMT. So if you notice on the 1-minute chart, okay, the price has been consolidating. Like as I told you early on, when the price moves into this zone, okay, usually you see a lot of whipsaws or a lot of noisy trading happening. So when it came to our support level, can you see this? You know, this is where about 8 GMT, right? The price hit our target and started to move up. Then again, now it is second time it is testing and it is still consolidating around this level, right? So this is one example. Of course, I would want to show you, but we look at live examples for you to see, at least, you know, then you know what we are talking about, or how to use our trading tools to take your trading decisions. And also, mostly, you must also understand that most of the time, okay, we do not use a very high time frame, because all we need is about a 1-minute chart to look at and take your trading decisions. So this is we would also guide you along as we go on, you know, how we can use a 1-minute chart to take our entries and where do we put loss. Put our stop loss and profit target. So if you have any questions, okay, pertaining to any of the markets which you want to discuss, right, I would be very glad to discuss, because feel free to ask whatever the crosses which you are interested in, we can discuss, because I think as a group, I think the more you ask questions, I think the more we learn as a group. At the same time, we can also validate, because, you know, I think this is the time when you look at live markets can be, of course, it can be more useful than looking at history, right? So let's look at the questions, and I'll be just answering your questions. Just give me a minute. Okay, the question was, you want to discuss about USD against South African Rand. Okay, unfortunately, we don't do South African Rand. I think I did tell you, we mainly focus on all these crosses, right? This Euro US, Pound USD, USD CHF, USD Yen, USD Canadian, Aussie US, New Zealand US, USD Sing, and against each other, right? So these are the only cross we look at, and basically this is how we take our trading decisions. Okay, the dollar yen. Okay, when you look at dollar yen, I'll show you the chart. Okay, this is we have a 2-hour chart on the dollar yen. Okay, basically we use a 2-hour chart to take our trading decisions, and we take entry on based on 1 chart. So if you look at this dollar yen, okay, right now it has been trading at 9090. Okay, 9090 is In fact, this is caught within a zone levels. Okay, this is within our zone 1, meaning in the support zone and resistance zone 1, right? In fact, if you look at this, what I feel about this dollar yen is, okay, I feel that the price is the downside is going to be limited, because you can see a divergence is happening, and if you are going for a quick trade, right? So if you are going for a quick trade, then because right now it is consolidating within 2-hour chart. So what I would look forward to, because it all depends what kind of trader you are. Like for example, if you are a scalper, then if you are looking at only 30-35 pips move, then you can take trades based on our report. Because if I'm going to go and show you each and every instrument which you're asking, I think I may not have the time to discuss, but I can tell you an overall picture on what is to be expected on this, what to look forward to. So if you look at this dollar yen, okay, what I feel is it is still got more room to come down, and as long as the price doesn't go beyond 91.20, right, which is above this level, okay, I feel that the price has got a tendency to move lower. This is again, this is going to be a very quick move, because I see a major support at 90.20, right? 90.45 and 90.20 would be the level whereby I would be looking to book my profit. Okay, overall, what I will be looking for this scenario is, okay, wait for it. Okay, I think the price might move to this zone, which is about 91.20, 91.05 to 91.20 level. Then I can look for a shorting opportunity with about 30-35 pip stop to have, even, especially if it's moving within the zone 1. Okay, I would suggest is probably you exit with a 30-35 pips profit, because especially that it's going to be consolidated mode. So it all depends what kind of trader you are, right? So if you are a risk taker, you can take. Then it's best for you to wait for the price to move below the support zone 1 or resistance zone 1. Then you take. That would be the best. Pound USD. So this pound USD, if you look at a 2-hour chart, okay, right now I feel that the top is about to be seen, right? So the price is consolidating right now. It is consolidating, but I think the upside is going to be limited. So on this market, it would be a good shorting opportunity near 163.40. Okay, maybe I can show you this maybe later on towards the end. I'll show you, right? So here you look for, right now it is 163.07, you see. So I would be looking to short near 163.40, right, with a stop loss of about 30-35 pips again. And can you show me the screen? And exit with about 30-35 pips, because we must understand that we are coming in towards the weekend, right? And also I think there is a CPI US data out, so you have to be a bit pretty cautious, especially when you are approaching a weekend. So that is the thing you need to take note on this instrument. Okay, Aussie yen. Okay, the Aussie yen. Okay, when you trade crosses, okay, the advantage of trading crosses is, especially when you trade on crosses, it is much more easier and much more easier to trade, especially when you trade crosses, because when you trade Aussie yen, and if you are able to see whether that Aussie US and Aussie dollar yen, whether have they moved out of the zone 1, then it will be much more giving you a clear picture, right? So if you look at this, Aussie and yen both are caught in the zone 1 levels. Right now it is still consolidating within the no man's zone. But what I feel on this Aussie yen is, okay, there is still more room to come down. Okay, just give me a minute. I'll show you where. So right now it's trading at 84.10, right? So what you can do is you can try to short near 84, right? 84.30. If you see 84.30, because right now it is it is consolidating around this level. So you look at about 84.30 with a 30-35 pips stop loss. Again, your profit target should be also about 30-35 because you know that like as I told you, it's caught in a no man's zone. And if you look at the overall bigger picture, okay, this price is coming down. It is bound to test the prior low, which is 83.35. And in fact, dollar yen, what I feel is it might close towards the low side, right? So do expect the price to be especially the yen crosses to be pretty weak, right? The next is 143.80, a key target level for shorters. So will reversal happen here? So for the Euro USD, excuse me. Okay, this one right now, if you look at this Euro USD, see on the bigger picture, if you look at on the one, I'm looking at 120 minutes, right? So there is more room for the price to come down, right? So we do have the major support, which is about 142.85. This is where you see the trend channel meeting. So what I would do on this particular cross is, of course, right now, if you see here, again on the 5-minute chart, so you see that the downside are getting closer and closer. So meaning in the sense the downside, you know, the bears are getting pretty weak. So again, if you want to do, again, you look for a shorting opportunity when the price moves towards 144.45 level, right? So that is where 144.45 or 144.65, that's the level I would be looking. See, you know, one of the way of adapting this system is, see, sometimes you know that sometimes, you know, like right now it's 143.90. So when I say 144.45, which is about 50 to 55 pips away. So one of the key ways when we use the system is, you know, that you would not get caught when the price is reaching low, especially when you are shorting. You do not get shorted when the price is at the low. So that's one way. But another one of the frustrating is sometimes you tend to miss the move. But I think if you want to be in the business or you want to stay in the business, and especially if you want to be in a conservative trading, I think it's good to adapt this kind of trading strategy, right? Okay, the next question is, could you show your code page to determine strong and weak pairs? What would be the best place for me to get that's hard to find in the way that you organize it? Okay, the code page, how I've organized is, okay, what I've done is I've categorized into all the US crosses, all the pound crosses, all the euro crosses, all at one. So I've categorized and arranged them in that manner. So when I look at that, it will be very easy for me to see which is the strongest and the weakest cross. Like for example, one look at it, if you see the net change, we have this Euro USD, which is about 110 pips. And when you look at all the euro crosses, in fact, it is all red around. The red denoting, which is meaning that the price is below the prior close. So this is one way to guide you along to see which is the strongest, especially when you come towards the end of the session, meaning end of the trading day session. Like it will be very useful when you start off the day, especially when you use this in a Asian session, right? But when you come towards the end of that, like for example, this US session, you need to tone down the time frame. Maybe you look at 360 minutes strongest, weakest, or even 120 minutes. Then you can get a clear view of how to use the system, right? The next question is, will the euro reverse here? See, again, you have to be pretty clear on what time frame you're looking. See, reverse in the sense, I wouldn't say that I think early on I did tell you that the euro has got more room to come down. So I wouldn't say that 143.80 would be the low for the day, right? So it has got more room to come down. So it is still, I wouldn't say, it is going to reverse now. So when you talk, at least you tell me next time, like you tell me what time frame, then if you be more specific on the time, then I would be much more easier for me to explain and guide you along. Okay, the next question is your trading system scalping? Okay, our trading system is basically, it can be used for scalpers, it can be used by scalpers, it can be used by intraday traders, short-term traders, or even long-term traders. It all depends what time frame you use it and how you interpret the numbers and the trend directions, right? So this is one way you can see, because see, most traders they go or step into the wrong side of the market is because they get themselves confused with their time frame they are following. Because like for example, like euro, you see, like today I see it's a down move. So again, you must know how far that the down move is going to last, because sometimes, like by the time you feel that the down move, you must know how far it's going to go down. So you don't end up getting shorted or in the lowest price. So it is best to have what time frame you're following and stick to your level of time you're dealing and take your trade decisions accordingly. Then you won't go wrong, right? Okay, the next question is, this all 2-hour charts? Yeah, most of our systems we use all are 2-hour charts, right? Especially for the hourly trend. But when we say on a daily time frame, of course we use a daily time frame, or we do also look at 360 minutes and 720 minutes chart. But overall, like I told you again, be specific and be more precise and clear what time frame you are following, right? So that would be a very clear trading strategy which you follow, and you may not go wrong, because you know that, see, I'm following the hourly, so I know that right now this is approaching towards the down, so at least I know, okay, this is approaching the price. So if I'm going to short now, I have to be very nimble, right? So when I say nimble, in the sense you have to be a very small trade contract size, and at the same time you exit with a very fast profit, a small profit, because you're approaching a turning point, right? The next question is, how do you determine your entry and exit points on our price on only the chart? See, I told you that early on. I showed you that. I'll get back to that screen. Okay. Okay. Basically, you use the screen. Okay. I know a lot of people, they say, why is this got so many numbers, or it's too many numbers, it's confusing. See, these numbers are mainly used for scalpers, mainly used for day traders, and when you use these numbers, see, this is how our numbers work. You see, this is all these numbers on the high side, like 1, 2, 3. You must imagine like all steps for so many charts. Let's say 4 steps, like from 145, 65, 145 to 620. So when you have a pullback for re-entry, then you should know that you expect the price to drop by another at least 2 steps, half of what the price has climbed. So I know that some of you use Fibonacci for your projection, to find your price targets. All this, see, all this, that the numbers are built in such a way that all this are already built into the system. So you can use, and all you have to do is just count the numbers of prices it has gone up. Then for re-entry you can use. So when you want to put a stop loss, like for example, when I take my trade entry at 145.55, then I put my stop 1 step below. That means I put my stop at 145.30, which is 5 pips below the support zone 1. So this is one way I use my stop loss, and my profit target I can use. If I'm scalpers, then I can plan to exit at 145.90, which is only about 35 pips. So this is how you use the numbers. Okay, the next question is, what is your favorite time frame? See, there isn't any favorite time frame, or there isn't. I wouldn't say that like what I'm doing is the best. See, every expert you see on FX Street, I think they are an expert on their field. So it's all how you interpret and how you use it. You must see. You have to take this, like for example, let's say I give you, let's say you ran a marathon, right? So you should know what your body condition is and what is your stamina, and you have to maneuver your distance when you run, because see, different body conditions will work on different. So if you feel that if you have a lot of stamina, if you want to run fast, you can run fast. But if you feel that if you do not, your body cannot take it. When I say body, I'm referring to what kind of capital you're using and what is your risk reward you're taking. So this is different risk reward ratio they use to take. So this is that's the time frame you need to use. No, I'm not showing any chart. I'm just giving a general example, right? So the next one is the next question is for today. How low do you see pound USD hitting? Okay, let's get back to that chart. Okay, the pound USD. Okay, the tricky part of this pound USD is it has been pretty strong against other crosses. So you do not expect a big down move unless it becomes weak against the other crosses, right? So as long as for our pound US, okay, we have our support U-turn zone, which is 161.75, and we have 162.45 and 162.05, right? So basically these are the three levels I would like to pay attention for the day, meaning I do have 162.45, 162.05 and 161.75. So the low can be in any one of these levels, right? So it's up to you to decide. And again, this is if you look at okay, let's show you on that pound US on the weekly chart. Excuse me. So when you look at this on the weekly chart, the pound has been against well above the open, right? So do not expect the pound US to weaken that much compared to Euro USD. Okay, let's say I show you the Euro USD. See, the Euro USD is trading below the open on the weekly, right? So the chances are, this might be much more a better cross to look at if you're looking for a shorting opportunity than the pound USD, right? So this is also one way you can use to see whether the price is trading above or below the open. And I told you earlier on, we are coming to end of the week, so you have to be extra cautious. Okay, for today, okay, that I have answered. How, do you use indicators? Okay, see, basically I am quite well versed in most of the technical tools, okay, because I've been in the industry for almost like 15 years, and you name it, I'm quite well versed in Elliott wave, Gann numbers, trend channel, Fibonacci, Andrews pitchfork, and all the indicators and oscillators like RSI, DMI, MACD, ADX, right? But I don't use all that in my, of course, that I use those tools basically to give me a confirmation or to put me in a comfort zone. But basically I use my reports to get the numbers, because end of the day, how does this numbers work? This numbers, you should imagine like this is like a specific stops for the price entry, especially when you trade. Like for example, when you bought a train or bus, I do not know how many of you bought on a running bus or running train, right? So you have to go to a specific place for you to board this transport. So the same thing, when you trade on forex, you must know that the price has got a specific stops. So it will be best for you to take trade at that specific stop. That's where the least risk is there, right? Okay, the next question is, do you look at dollar index, euro index, pound index, etc. Okay, and in fact, I don't pay attention to all these indexes, but I use, like I told you early on, I showed you that code pages, and I use these code pages to give me a relative strength for the day, because especially I do have for the day, for the next 2 hours. So I use this to guide me along. So when we trade, like for example, I do not know, see, because like trading in 10, 15 years ago and trading at now is like it's not the same. So things are getting very complex. As a result, you have to get in a very efficient and to get in the business, right? So I've given warning saying that my time is ending soon, right? The next question is, do you see pound USD reverse before end of the day? I told you earlier on, pound I do not see to weaken that much compared to other crosses, right? So if you are looking to short pound, be extra careful, right? Okay, I think that's it. Okay, but one more question is, where do you use this moving average so that you can have your chart's direction on trend? See, the moving averages, of course, see, I do moving averages. I use 21, 34, 55, 89, so on and so forth. But when you use moving averages, you must know how to use the moving average, because you can't use the moving average to guide your price when the price is making new highs and new lows. So the moving average only comes into picture when the price is retracing back, right? Unless you use a displaced moving average. So that's how you use it, right? Okay. I'm so sorry. Okay. And once again, I wish to thank you for coming to this session. And I would also like to wish FX Street for organizing this event. We would be on with FX Street every Tuesday and Friday, right? Feel free to come back, and if you have any questions, we can always you can always write to us. And we also have an in-house webinar which is every Wednesday. So do feel free to join us, right? So with that, once again, I wish to thank you again, and looking forward to see you again. Goodbye.